So before we start, my name is Dan Morgan, Head of Policy, Regulation, Innovate, Finance. We'll just have a quick run down the panel and then we'll fire away. Damien?
Yes, Damien Richardson, Head of Payment Strategy and Innovation at RBS. I spend most of my life looking at PSD2, open banking, probably in home life and work life at the moment, really understanding what it means for the customer and how we can improve our customer experience as a result of PSD2 and open banking.
Hi there, I'm Ed Badra. I'm Head of Legal at Go Cardless. We're an online payments provider. We offer direct debit and bank-to-bank payments. So PSD2 and the changes that it makes, the potential for change there is potentially massive for us as well. It could change the entire way we do business. So really, really exciting for us.
Hi, I'm Gemma Godfrey, founder and CEO of Moola, which is an online investment service. We help people grow their money. We help employers look after their staff better. We help financial advisors look after smaller clients. But the important thing about this, obviously, the PSD2 and how it can affect the investment landscape is it's all about creating something that's much more customer-centric, putting power back into the customer's hands. And that's a massive change within the industry and something that we're also passionate about.
Mike Lavin, the CEO of Currency Cloud. We provide a platform for international cross-border payments for a lot of different firms in the digital economy, lenders, e-commerce firms, marketplaces, and the PSD2 into the opening up of the European banking market will be dramatically transforming for our business and a lot of the companies that we deal with.
Thanks, guys. So FinTech, I mean, PSD2, many of us won't know what it is, so we'll get onto that. But I think the rise of FinTech has been driven by a lot of things: demography, technology, in areas which are rather underserved. Where there was high margin to take. But one of the key trends as well is that FinTech markets have also been driven by public policy. We've seen that a lot here in the UK. The FCA's Innovation Hub driving that competition mandate, the bespoke regulation around peer-to-peer lending, and obviously now this drive towards open banking and PSD2, which is going to create a whole new market again in FinTech. In the Commission's own words, PSD2 is intended to promote competition, innovation, and transparency. Just as a 101 for everyone in the room, how exactly do you think it will do that? I'll open that up to everyone in the room first. Damien.
Yeah, so for me, PSD2 is opening up access to effectively the bank accounts to authorised third parties, so that those third parties can make sort of payments on behalf of the consumer or the business customer, and also can get information and data about the transactions that have gone through that account. So it does open up the bank account, as it were, for third parties to use on behalf of that customer. And it's the on behalf of the customer is an important point. The customer needs to give that authority. From a bank point of view, we need to make sure that is secure, and also the customer experience behind that is a good one.
Right. I think maybe if I chime in on the innovation piece, yes, fundamentally there's that kind of whole new access to accounts, but I think in terms of the wider ecosystem, there are so many parties that have the potential to innovate there. So we have the banks who themselves will need to innovate. There's companies that may come in and kind of put layers on top of the APIs that each of the banks produce. There's the new third-party providers who can go and aggregate information from accounts. There's those that can go and initiate payments from accounts. There's a whole new ecosystem of providers which is just waiting to flourish, I think. So there's going to be a lot of innovation coming through.
If we take a step back, what's really going on is that the balance of power is shifting. So the consumer can themselves control a full payment. So they can decide, they can cut out the middlemen, and they can decide exactly who actually implements it, so a service provider of their own choice. So by taking the power back themselves, it means that we're seeing, and we've seen this again across the industry, a shift from the institutions really having the monopoly to actually the customer being the one that says, okay, this is who I want to deal with my money. And that's a fundamental shift. It means that services have to be much more customer-centric. Everyone talks about giving a customer-centric service, but they really do. And in terms of innovation, it does mean that there's going to be more focus on collaboration, because yes, you'll have the big institutions that have the customers, but ultimately they're going to be more aware that they need to team up with other companies that actually provide a service, or that, as you said, the front-end interface that people are really going to connect to.
So the sort of older model of banking and finance was very much around the mindset that real men take deposits. So real men take deposits and then they loan it out and they make the margin in between. That then has a regulatory regime that on the very, very real protection of that margin where you could have a run on a bank. So suddenly you have all of these services that have nothing to do with that. They could be payment services, they could be account services, they could be lending services. And what you finally get in PSD2 is separating that banking function, which is a key function in the way banks make money relative to their central banks, from a whole series of other services. So innovation can come up because it's not stymied by the kind of very needful regulation that you put on a series of banks that are actually holding those deposits and lending them out. So we always talk a lot about the data side, but another part of the PSD2 regulation has to do with pricing transparency. So what you're going to find is that because now you'll get transparency on cross-border transactions, for example, on both legs, in and out, you'll then be able to get prices really crashing as those things start to crash down. So it's this whole concept of a cultural change, moving away from a culture where there's a bank that does something very substantial, needs substantial regulation, to a much broader area where there are businesses that need, actually, frankly, much less regulation, and then they'll be allowed to flourish.
PSD2, if we look at it from the outside, I mean, the story of FinTech has often been described as the unbundling of certain services, at least in the initial phase from the universal bank, whether that's lending, remittance, or other services delivered in a more laser-sharp way through digital. But this very much brings the institutions back into the play through regulation, into driving their own markets, and really puts the pressure on them to innovate in this space as well. So where do you think the biggest opportunities or threats lie for the institutions, and where are the opportunities for the fintechs as well? I'll start with you, Dave.
Yeah, so I think PSD2 and open banking as well effectively give sort of new service opportunities for the incumbents. And take my example as a bank, if you look under PSD2, the bank has an opportunity themselves to operate as an account initiation, a payment initiation service provider, i.e. can be a third party themselves, only on their accounts, but also on other bank accounts. So it gives that sort of proposition. So you do get the example of a consumer could so decide that they want to select a particular bank to make their payments on their behalf across a number of retailers. So you do get that, and they themselves, as a bank, would be a competition against other service providers in that field that are also chosen to be an ASIP or a PSIP. So I think it does open up new opportunities, but at the same time promote the competition. So the banks do need to be competitive and think about new ways of doing things, and also collaborate and cooperate with other service providers out there. So I think the fact that we will have these open APIs allows us to maximise the benefits of both worlds, as it were, to the banks with the customers, and the regulatory regime that we're used to the heartbeat of that, and we have a sort of a set rhythm to how we operate with the regulators. But on the flip side, we see sort of some really excellent customer experience propositions coming out from the fintech space as they actually put the two together, some new propositions for our customers. But I think at the end of the day, I think it's we all spend money and payments on a daily basis, and we all decide what's the best way that we want to make a payment. And I think let's keep focus on sort of what the end consumer, or even the end business, the end treasurer wants from this sort of thing. How are we going to help that treasurer at the end of the day run their business more efficiently? And I think it's all about how do we use those APIs to deliver more services, and again using the cooperation and the collaboration to really maximise the benefit.
Just to follow on, many people talk about banking as a platform and opening up new services from the bank themselves. Do you feel there's a danger that the banks could be disintermediated in that customer journey? I mean, we looked at China, and obviously they've got a different banking model, but it's a third of all payments to Tencent and other platforms don't use a bank at all. They use third-party providers to initiate the payment. Is the UK market, is the European market different? Is that a potential threat? You've got to be really active in that space to add value to that customer journey.
Yeah, so I think that with an incumbent, as you were, I think, and mainly banks, I think you've got to realise that it's both an opportunity and a threat to the business. So personally, I see it sort of the pint being half full rather than half empty. So what are the opportunities? Yes, you may be risk disintermediation from a certain amount of customer groups, but what are the customer experience that you're going to deliver and really want to focus on to delight the customer, so they will choose the incumbent or the bank or even the collaboration that you put in place to deliver those services. So I think that's the key. I think regulatory programs, in the 25 years I've been doing these sort of things, have always been, you've got to fit to these sort of mandatory, and we've got to make sure we deliver to the regulator. I think what we're seeing with open banking and PSD2 is actually the regulators saying actually there's innovation is in the objectives and the agenda. Which is a good thing. So I think that's a good thing both for the banks and for the fintech space to deliver on those.
Ahmed, you said that Go Cardless was child PSD, the original, number one. What are the opportunities for you in what's going on with PSD2?
I think that's right. I mean, we came about as a result of PSD, really. But I think for us, the opportunities are, to some extent, despite kind of all the change that's ongoing, more of the same. So, as Gemma was saying, it's all about the customer focus. And I think one thing that fintechs do incredibly well is laser focus on a particular customer that they want to serve. I think what's going to be really interesting is to see if the institutions, such as RBS, can kind of cast off the shackles to some extent of the vast customer base that they're serving at present, and kind of focus on those individual markets and release very specific offerings for those, because that's what we do and that's where we've seen success, because we don't need to serve the person that needs to walk into a branch. We don't need to serve the person who wants to call us up and do things, or to fax us, or whatever the kind of the old customer base is. We don't need to serve those guys, and we don't need to provide a plethora of products. We just do one thing and do it very, very well. And I think PSD2 for us just provides new ways of doing one thing very, very well. So we provide direct debit at the minute. That's the underlying system. If at some point in the future it's better for us to replace that with another form of serving the customer, ultimately there'll still be payments happening, but it might be that we're a payment initiation service provider and we're pushing payments instead of pulling them. The customer doesn't care, really. They just want their money on time, efficiently, using a great API. That might be the kind of change we see. So very much more of the same, just with a few extra tools in our tool set, really.
Opportunities.
Yeah, so right, let's do 3 opportunities and 3 threats. Quite punchy. So the 3 opportunities would be, first of all, the overarching opportunity is obviously making something customer-centric. But opening up this payment system, first of all, it'll allow people to be able to consolidate their accounts. So if people have multiple accounts, they'll be able to pull the information into one place to have a better understanding of actually where their money is, how much money they have, which is only a good thing. The second kind of opportunity is also to provide a more intelligent, they all link in, but to provide a more intelligent service. And I know this kind of treads on the toes of, because I know there's going to be another talk on open banking, but there is this kind of grey area, because obviously they overlap. Providing a more intelligent service, because again, if you as a service provider know how much money they really have, and holistically, you're able to actually provide them with a much more tailored product and service. And then the final one is also cross-selling, is knowing where somebody is in their life cycle, how much, what their needs are, and be able to actually make sure that they're getting the right advice at the right time. So those are the 3 opportunities. So it is a really, really exciting chance to be able to just deliver a better service to people. In terms of the threats, the first one is data security. And that is obviously number one. I mean, we saw the data breach with TalkTalk. We saw the data breach with Tesco's, people not knowing where their money is, people calling up. So obviously, and there are solutions around that in terms of limiting the access. But the problem with that is it leads on to the second point, which is it will then make it costly then for institutions to be able to work through this to make sure that they are offering access, but in a safe enough way so there aren't these data breaches. So you've got the cost, you've got greater overhead, you've got people that are working on this. And then the third one is there's now going to, which I guess is actually an opportunity, but is there's now going to be a greater focus not just on attracting customers, but also retaining them. Because as soon as you open the doors, which is a good thing, and allow people the freedom to be able to choose different providers, it does mean that you have to focus much more on your existing customers to make sure that they're happy.
Just a follow-on question, the potential for this whole life picture of people viewing their financial services through aggregation, real trend at the moment. We see the pensions dashboard and something in another area which is trying to amalgamate people's pension pots. Obviously, we've got open banking as well, where this whole sort of dashboard approach to how you view your financial services. As someone who's looking to invest that money, you're not a step beyond to look at robo-advice and seeing where people spend and overlapping an API on that.
Exactly, and if you look at different markets, so I mean, I think Australia's the most advanced, and you've got America, and then you've got us, where the markets, there is such a big opportunity there. And the great thing about some players, you've got Acorns, you've got different players in the market over there in America, is what they can do is they can look into somebody's bank account and they can say, well, we can see from your history that you usually spend, let's say, £2,000 a month. You've got £5,000 in your bank account. Now we know that, let's put the barrier higher, let's say £3,000 is the threshold. Let's take that extra bit of money and put it to work. So it's just more intelligently servicing the person and giving them a better view on, because otherwise you're going in half blind. How are you able to guide people, advice, guidance, how are you able to guide people towards what's best for them if you can only see half their assets? So to be able to see everything that's going on and manage their cash as well, it will just create a better service.
Mike, same question to your opportunity.
Yeah, so we often always talk about the data side and of PSD2, where actually I come from the payment side, and the payment side will be just as transformed as the data side. In terms of transparency of pricing. Also, for example, there is no, right now, European Venmo. So if you've ever talked to anybody under 30 in the US, they start by sharing the dinner bill, then they move to sharing rent. Then they move to sharing the purchase of a washing machine, and then they move maybe to purchase of a car. So there's a whole series of peer-to-peer payments that occur in the US that right now there's no European provider of that. Once you start to open up the banks to something, for example, other than SEPA that can do payments in Europe, you're going to start to get a whole series of innovation. For our firm, that's great because we provide cross-border services to a whole series of digital providers, whether it's equities or lending or things like that. I think the question, and it's not necessarily a threat, is what's not proven is the extent to which individuals will buy services from financial institutions outside of their country. If you can, there's a lot of work that's been written about that. And so we're betting from the FinTech world that our cross-border services coming from the UK are going to be consumed in Spain and France. But it may very well be that the delivery of those services will have to be through a local financial institution. Because the level of trust, even if we like to think about Tesco and TalkTalk, the trust that goes along with some of that means that delivery may be very, very different than who the providers are. Collaboration, of course, is what banks say is the last gasp. When a bank says we need to collaborate, it means that they can't do it anymore and that they're failing. So there probably will need to be collaboration because service delivery may be very different than service provision.
I would say, when the bank says they want to collaborate, they're very forward-thinking. I wouldn't say it's a last gasp or anything like that. I would say they're very forward-thinking.
You're being polite.
And actually, just to add to that, I think you raised a really good point just to bring up. There is this move to on-demand services. And let's not forget the stats that I think it was the British Banking Association came out with, that 3/4 of UK banking will be carried out on a smartphone within the next 4 years, although probably it's 3.5 now. So it's just delivering people a service where they can see their money on the move, and it's really customized to them.
Just to come back on that, club, I think so I've been in sort of banking probably about 30 years now, and the banks have always collaborated, not to the degree they're going to have to now, but
right.
We've seen services and through joint ventures and the like. And I think I don't think all of a sudden we're going to see. My mum on the 13th of January 2018 switch over to a PSD2 enabled sort of iPhone payment. Right. I think we're going to have this sort of natural sort of move, natural rise, and in fact it may be probably October, November time before it all sort of settles down and comes in. So I think it's going to be, as with contactless, for example, we've only had that explosion when something actually hit the sweet spot, say London Transport, from a contactless point of view, actually sort of we're making people to use contactless payments. And I think we need that for PSD2 effectively. What is the niche app that's going to be out there that you'll need the banking information plus information from other open APIs to say, actually, here's a fantastic customer experience that none of us probably on the panel or in the room today have actually thought of. You know, that's the thing that we'll get out. It probably won't come on the 13th of January 2018. It'll probably take, you know, maybe a year or so. But that's where the collaboration is key. And so we've been using something called bankofapis.com or #bankofapis to really encourage that level of thinking. So we've been exposing some sort of open APIs to the developer community and saying, okay, what do we don't know? What do you want to see on these APIs, and what don't we know that we should be offering? And we've had, you know, from students all the way up to some of the the multinationals come to us and say, let's send a team over that weekend. We could run it using hackathons to create new services. And I think that's what I mean by the collaboration. What can we do? What do you want on these APIs? Because we can say, here's a faster payment API. But that could be no good. What do you actually want as a developer or even a corporate or a treasurer from those APIs? I think that's where the collaboration really hits home.
Well, it's all about user testing, isn't it? I mean, as you said, there's no point. That's the whole lean, agile. Oh, my CTO will be so happy with you saying all these words. Lean, agile, method of working, which is instead of just building something. Oh, I think I'm so clever, I'm going to build something. And as you said, and then actually you present it to somebody and it doesn't quite integrate, it doesn't quite work. It's about just building it and actually testing and focusing on what the demand is.
Debbie, you talked about your mum not using it on the first day of operation.
Don't tell her.
and so other people in the market that aren't FinTech nerds may also be worried about liability, about who do I go to if there's a third party or more involved in my payment transaction. I've opened up my data, and maybe that is the payment initiation provider. But ultimately, many would feel that they go to their bank anyway. And so who is liable and where should consumers go to and is there the right redress in place? And
yes, I think there's some detail to be worked through, but I think the broad sort of sense from the directive is that the AS PSP, i.e. the bank, in 9 times out of 10 will be the one that actually will have that conversation with the customer, refund it, and then claim it back from the PSIP if that payment goes wrong. And that's not undifferent or different to what happens at the moment with credit card transactions or debit card or even other payments. They see the amount disappear from their bank account and go, I'm going to phone the bank and ask them sort of what's happened to this payment. And the bank is, depending on what scheme, obliged to refund and then will make the investigation on behalf of the customer. So I think it's in line with what we already see from. It's about working out what is the process for a ASPSIP. We need to change some of these acronyms. To claim back from the PSIP, and what happens if that PSIP is not in the UK or anywhere else, and does that PSIP have the right insurance in place or guarantee or other things in place? So I think there's a lot of detail that we need to see work through before we can actually confidently say this is all. We'll totally understand how this is going to happen.
But ultimately, it doesn't sound like it's going to be a huge barrier to this.
I don't think so. I think it is very similar to what happens in reality now. It's kind of just codifying that. It's actually giving consumers more rights. So there's a kind of de facto right to claim a payment back. And that's very similar actually in practice, if anyone's aware of it. Obviously being a direct debit geek, I am, but the direct debit guarantee in the UK allows you to call up your bank and say, I didn't authorise this payment, and immediately your bank refunds, and then they go and do the research behind the scenes, very similar in the credit card world. So I don't think that should be a massive issue for the consumer. There are some things that need to be worked through on the back end, particularly around like secure customer authentication. What if that's not applied? Who takes the blame in that case? So there's kind of these more complex issues to think about behind the scenes, but I think from a consumer perspective, PSD2 is actually a great thing for them.
Yeah, so I think it's giving the customer certainty and clarity. So I think we've got some legislation that says you've got 6 months to claim this back, and others says 13 months. Some with the direct debit scheme is, at the moment in the UK is forever, effectively.
So I started to look at this somewhat differently.
Yeah.
The way the regulatory regime works now is the regulator can get a tremendous amount of credit, especially in the UK where it's been quite enlightened and quite liberal. But in fact, the banks then become the enforcers. So in fact, my regulatory issues have nothing to do with the regulator who is generous and enlightened for the most part, but have to do with the banks who look at their risk as asymmetric relative to the various independent parties that are providing to them. So actually it allows the regulatory regime to look liberal, whereas in fact it's quite conservative. So the PSD2 issue will be, how will the banks act as enforcers? If the banks act as enforcers in the way that they do now, which is not permitting bank accounts to lots of small startups, monopolizing the connections to the central clearing systems, for example. So if I can be a payment initiator, that's great. But if I actually can't connect to the Bank of England, and then what have I got? So in fact, what we haven't seen yet is what the pressure will be on the banks to actually behave differently relative to the parties that are independent in terms of being the enforcers of the regulations. So I think when it comes to whether it's Innovate Finance or any of the other firms or Emerging Payments Association, lobbying areas for the industry need to keep lobbying the regulator for more and more openness, and especially connections to clearing systems. Without that, we're only going halfway. So it's watch what the banks do is what's important.
And also there's a bit of a nuance just within that as well. There's this debate going, which is convenience versus risk. And so there are companies that are also looking at, it can't be just a broad brush, it's also to do with the amount as well. And there's a lot of talk about actually for smaller payments, maybe there is a shift of liability in order to provide a really smooth service to get people in and comfortable with the service, at which point then the liability shifts back. So there are nuances within that.
And you all touched on it a little bit, but there's been a big pushback from FinTech and many others within the community around strong customer authentication within the draft regulatory technical standards. Can someone explain exactly what the issue is? Is this not a positive thing to have a strong customer authentication? How is it going to?
Shall I just explain just what it is, and then we can get into the details. So there are three things you need for strong authentication. Number one, you need to know something, so that's a password. Number two, you need to have something, so that's a phone, access to something, and you need to be something, so like your fingerprint, something that you actually have on you. So that's the view that if you have those three things that are independent,